Jason, you just mentioned it. Why is the Chinese capital markets in difficulty? Nobody knows what the long-term earnings are. How do you forecast it? It's not simple anymore. It's not a model. It's not an interest rate. It's not a discounted set of cash flows, right? And so that's how they need to refactor themselves. They need to have a much larger population. If you don't have that, you have to figure out how to do it with immigration. If you don't have that, what China has done is they've tried to go to Southeast Asia and to Africa, and they've tried to create that synthetic form of a growing pyramid, right? Now that can work as long as the balance sheet of the country supports that, because ultimately you're still talking about moving money offshore, okay? So I think they're in a little bit of they're in a pretty difficult spot. At a very macro level, China has one massive problem, which is one of population. It's hard to get an accurate count, but it is an aggressively aging population, which was the result of the one child policy for a very long time. China has sort of been on their heels trying to adapt that policy. But really, the last data I saw, I tweeted this out. It was a little while ago, Nick, so it may be hard for you to find in my Twitter feed, but it was a projection of China's population, which essentially showed it contracting by almost 50% by 2100. So that's a really, really bad situation. Now, when you have a slowing population, then the economy has to morph. Why is that? When you have a young population, so for example, take what China was 20 years ago when it entered the WTO, or what India is today, when you have lots of young people, you can on-ramp them into economically productive activities like manufacturing. The problem when those folks accumulate middle-class income and wealth is that they age out of those kinds of jobs, like they did in America. And what we seek are services and service-level jobs. And you spend more money, you spend it in a different way. So as populations age, your economy has to turn over, unless you have a large bulwark of young people that is constantly growing to take up more of the slack, the economic slack, to pay for these folks who have different lifestyles, more savings, and different needs, specifically healthcare. That's China's enormously big problem. So when you see them talking about 6% GDP targets and you think, how does a country that big even grow at 6%? It's because they're reverse engineering for what they need to create economic vibrancy in that country. And so when you start to look at 2%, which in America you'd say 2%'s great. We would like high-fiving each other for 2%. That's not a sustainable level of growth for what's happening inside that country. It does not create enough of expansion economically to cover all these folks. That is a really, really big issue. So as that happens, I think what we need to do is figure out how to be competitive. Now, this goes all the way back to our first conversation. Subsidies don't make us more competitive. Things that governments can do to make us more competitive are long-term, drawn-out tax incentives that change the earnings capacity of companies. Why? Because then the capital markets reward those businesses.
China's in chaos right now, apparently, in terms of slowing economic growth, bank protests, mortgage protests, exactly what I predicted last year when you guys were talking about China was going to dunk on us. And I said, it's very hard to run these authoritarian countries, and the citizens like to protest when they get the short end of the stick. And here we go. Chinese economy is growing very slowly. They were going to do 5.5% this year. They were only 0.4% in Q2. COVID has a lot to do with this. But there's been a series of bank protests, and the media has been trying to figure out exactly what's going on here. To just set the stage here, rural banks in China, in a couple of provinces, froze a bunch of people's withdrawals in April. Okay, sounds like the crypto contagion in many ways. They had been offering unusually high interest rates, also sounding like the DeFi grift going on here.
I think it's more like 2008, Jason. I think it's more like the financial crisis in 2008 that was driven by the real.
Over the last 30 years, right, the Chinese economy grew from 318 billion in 1990 to 10.5 trillion in 2020, right? Incredible growth. GDP per capita, grew kind of in a similar ratio, right? Now, from $318 per person to $12,500 in 30 years. I mean, really unprecedented in the history of humanity. China now accounts for 20% of global GDP from less than 2% in 1990. Now, if you look at historically what drove that growth, we all talk about manufacturing, right? Manufacturing accounts for about a third of the economy. And manufacturing as a sector was growing in China 25% year over year in 2008. And then only grew 6% in 2022. It's like basically, kind of reaching an all-time low in recent years. So that's historically been the driver for growth of this economy. And so much of the bargain between the people and the Chinese Communist Party has been keep giving us a better life, keep growing our economy, keep giving us more housing, more stuff, more food, more safety, more security. We'll support the CCP. And the challenge that the CCP is having is that a lot of that growth, the core growth engine, is starting to slow. So manufacturing is slowing. Then real estate was growing. And so real estate accounts for 7% of the Chinese economy. And I've got a good stat for you guys here. In 2005, 250 million square meters of real estate was sold in China. In 2021, 1.5 billion was sold. Every year it's been incrementing. So the amount of real estate that's being produced and sold was increasing like crazy. This year it's collapsed. So it's down forecast to be about 1.25 billion now. So the first decline in real estate building and sales. So that part of the driver of the economy in China is now collapsing. And then the financial services sector accounts for 8% of the economy. And that's been growing because it's leveraged off manufacturing and real estate and all the capital that's flown in, all of which is slowing down and stopping. There's $58 trillion of assets in China, generating about $700 billion of annual profits for the financial services industry, insurance, banking, lending, and so on. So a lot of the conflict and the things that are starting to fall apart, which may just be the tip of the iceberg, is a function of a fundamentally slowing economy and the forecast and the outlook for an economy that doesn't have the drivers it's had historically. And things are starting to come off. The wheels are starting to come off a bit. And so, look, the advantage they have is central planning, long-term investments, being able to kind of be thoughtful about this. But in order to do that, there's certainly going to be a need for the CCP to keep people in line as some of the long-term bets hopefully play out for them, as they would say. In order to do that, they're going to have lockdowns and other sorts of mechanisms of regulatory control over the people. But really, this could be the beginning of some of the unwinding and real concern about, is there a core economic growth engine in China that can save them? And what will it be?
Real estate bubble.
Yes.
They've got their own real estate bubble, which is collapsing there.
Correct. And so there's multiple things going on at once. The authorities haven't said how much money is frozen. Protesters claim it's billions of won, but it's hundreds of millions in the US. After weeks without a resolution, customers began protesting. Plainclothes thugs have been hitting and kicking the protesters. And as of Wednesday, a video went viral of the CCP bringing in tanks to protect the banks. Very evocative of Tiananmen Square.
I think this was about 500 years ago. There was a Chinese emperor who banned shipbuilding and banning having a navy. And because of that, China shut itself off from global trade, and it fell well behind the West, which then explored and captured the New World. There's this question about, the Chinese culture and civilization was much more advanced than the West, than Europe 1,000 years ago, but basically it fell behind. And a big reason is because of this unilateral decision by one emperor to basically close themselves off from the rest of the world. So you have to wonder, does this autocratic move by Xi basically doom their economy to a recession? It seems like they're not learning from our experience. These lockdowns didn't work. I mean, you can't stop the virus. It's eventually going to get out. Even I saw Biden got the virus this week. I mean, it's out.